Good afternoon. This is Brian Splitt with Allendale here on Friday, May 6, 2011 with your closing commentary for the week. And what a week it was. We had mass liquidation in commodities this week, really started by the silver market after nearly reaching $50 an ounce in that contract. But let's go to the grains here first. We did have the corn market settle lower here today. July corn was down 22.5 cents, and settlement was at 6.86 1/4. That is down 70 1/4 cents on the week. We had new crop December down 15.5 today at 6.40 1/4, and that is down 29 1/4 on the week. On soybeans, old crop beans up here, actually up about 4 1/4 on the day. That's 13.26 settlement. That is down 68 cents on the week. And new crop November up 1 3/4 at settlement today at 13.08 1/2, and that is down 65 3/4 cents on the week. And over to the wheat market, we did have July Chicago up 5.5 today at 7.59 1/2. That is down 41 3/4 on the week. While the July Kansas City wheat was up 17 cents today at 8.74, which is down 28 cents on the week. So as you can see, if there was any winners in the grain markets this week, it would have been the new crop July Kansas City wheat and the new crop December corn contracts. So a couple things of note here for corn. We did close below $7 today in the July contract, and that's the first time that we've closed below $7 since the day ahead of our quarterly stock report on March 31st. We also closed below the 100-day moving average, which we haven't done that since we made those Japanese tsunami lows on March 16th. Now, something of note, when we did close below the 100-day after the tsunami liquidation, we were limit up the very next day. So we'll see if we get the same kind of price action next week in corn. The uptrend in the old crop corn will come in at 670, and this is the uptrend from the lows last June. And another thing of note is we did have the new crop corn December hold last week's lows on a closing basis, having only traded through them by about 2 cents on the lows today. So when you take everything into account, crude oil having about a $20 range this week, silver having roughly a $17 range this week, and here we have December corn still closing above last week's lows. It still looks like there's some good support under that market, and we're still going to be very in tune with what the weather forecasts have to say. Again, we have had aggressive planting in the western corn belt, and the conditions have improved, albeit we're not planting in the greatest of conditions. And guys out east still have yet to been able to get the planters rolling, so these are still things that we're going to want to look at. A lot of what I've read here overall of this whole liquidation event suggests that when the money does return, they're going to still look for markets that have the fundamental backing to be bought. And a lot of the investor analysts out there still suggest the grains are going to be one of those places to look at. So on the soybeans, we do have some concerns here. We have concern really over the demand out of China. We've got concerns that we still have high stocks of soybeans in the ports in China. We've got concerns that some of these sales to China that have not been shipped yet may still have a chance to get canceled. The amount of unshipped soybeans this year compared to last year is quite a bit higher. So these are some things that we're looking at here that do provide a little bit of a bearish outlook on soybeans. Also the idea that if we do not plant all these acres of corn, potentially some of these acres may move towards soybean plantings as well. But we did have an uptick in soy oil demand from the biofuel sector, so that's a positive note. Hopefully we can see that continue. On the wheat side, we did have some supportive news on wheat today. The Wheat Council Tour estimated the production at 256.7 million bushels. The pre-estimates were for 278 million bushels. So you've got about a 20 million bushel discrepancy right there. That may provide a little bit of support to the market. We also had Informa come out today slightly reducing their estimates on the winter wheat production overall. So a couple things going on there. Again, and that's probably why we had the July Kansas City crop or Kansas City contract up the highest here today out of all the grains, leading the way. As far as some of the outside markets, just briefly going into that, the meat markets up and down here a lot today. We did have June hogs and June cattle just about unchanged in the after-hour Globex trade right before the taping of this commentary. Crude oil down about $2. That's down $16.75 for the week. That's the largest one-week drop in crude oil prices. Gold is actually up about $11 at $14.92. We had silver down 95 cents at about $35.30, and that's about $2.30 off of the overnight low. The Dow futures up about 15 points, S&P futures up a point, and NASDAQ futures also up about a point. This is all with the dollar index up about 70. We have had support from the dollar. Really, it seemed like when Bernanke gave his speech last week to the public, indicating that we were looking for interest rates to maintain low levels here, it seems like that's kind of what started this general commodity liquidation event, almost a buy the rumor, sell the fact type attitude as a whole for commodities upon that announcement. And the dollar did put in what looks like at least some kind of a short-term interim low. But we have come up against some resistance. The downtrend in the dollar did hold at today's highs. So we're going to need to see some further buying in the dollar next week to maintain that course. But if you have any questions at all over these markets, please give us a ring here at 1-800-2-MARKET. That's 1-800-262-7538. You can also check us out online at www.allendale-inc.com. And good luck trading to you next week. Thanks.